All right, everyone. Good morning and welcome to the Entrepreneurs Mindset Deconstructed, a virtual entrepreneurs summit. This is day 2, Uncommon Sense, the money mindset of successful entrepreneurs. I am Sandria Washington. I am the Director of Engagement and Partnerships for Build Bronzeville. And this week's summit is a partnership with Build Bronzeville, the Greater Englewood CDC, and supported by Coleman Foundation and the Illinois SBDC. We are so excited to have everyone here. We have had amazing registrations, so we are excited about the turnout. Let me just tell y'all in advance, the panel for day 1, they set the stage on fire, but I think we're not even going to leave any trace of anything today, because we have a dynamic panel for you today who is really ready to share the money mindset. How do you financially think about your business as an entrepreneur, and really share with you the things that we don't always hear about. So they're going to drop all of the gems, no holds barred. This session is being recorded and it will be available for playback later. And we have some surprises for you. For attending, you will have an opportunity to be selected at random for some amazing prizes that we have for all of, well, not all of our participants, for some of our selected participants selected at random. You have the opportunity to possibly win headshots, because every good business owner needs some high quality headshots, as well as some branded gear. You may also have an opportunity to have customized gear with your logo, customized shirts. And you may also possibly win a 3-day pass, a desk pass for our Bronzeville incubator. So you can come visit us, get your work on in our co-working space. And so we want to make sure we had some prizes that entrepreneurs can actually use. So we are excited to select our winners at the end of the summit. So winners will be contacted at the end of the week. But without any further ado, I would like to introduce our moderator for today's session, Ms. Shantel Hampton. She currently works as the Business Banking Relationship Manager in the Community Development Group at CIBC Bank, one of our amazing community partners. She was raised in Detroit, Michigan, D-Town, and she's been living here in Chicago since 2016 and has a very varied background in the financial services industry. And has over a decade of experience in the business banking and treasury management with JP Morgan Chase, PNC Bank, as well as Huntington Bank. So with that, I would like to turn today's program over to Shantel. Thank you.
Thank you, Sandria. Good morning, everybody. I know this is going to be a very, very informative panel for you all, very valuable information you're going to get here. We have some dynamic speakers here today, some entrepreneurs, some bankers. So without further ado, let me just get right into it and ask the panelists to introduce themselves. I'll start with Pamela.
Sure. Good afternoon, everyone. I'm so very excited to be a part of the initiative today. This is a wonderful partnership. I am really fortunate to be a part of this and look forward to just sharing information with you guys as we kind of go down this journey. As Shantel mentioned, I'm Pam Randall. I am the Vice President of Business Banking, the Minority Entrepreneur Program, which was actually rolled out third quarter of last year. I have over 20 years of experience within banking, probably 15 of which has been around business banking in different roles from a relationship manager perspective. I've also been responsible for SBA lending from a regional standpoint, and really spent a lot of time with business owners in different ways in order to really help them grow, scale, and develop their businesses. So this particular panel discussion is right aligned it is rightfully aligned with my passion and purpose. So excited to be here. Thank you.
Awesome. I didn't know if you said, I don't remember if you said what bank you work for now.
For JP Morgan Chase. Yes.
Okay. All right, let's now go with Robert.
Hey, good afternoon, everyone. My name is Robert Johnson. I describe myself as a lawpreneur. I'm a combination of two of the craziest professions, that being a lawyer and an entrepreneur. I've been a lawyer for almost 30 years and been a serial entrepreneur since about the age of 12. Have had many fits and starts, and what I learned, and first thing I can share with the audience, is that entrepreneur is just a fancy French word for hustler. So I currently oversee, wear a number of hats. I'm the managing partner of the Solomon Group, which is a management consulting firm that focuses on social entrepreneurs, helping them raise capital, help minority and women entrepreneurs grow their businesses. I also serve as the Chief Economic Inclusion Officer and General Counsel for the YWCA Metropolitan Chicago, which there I oversee our Economic Empowerment Institute, which includes our SBDC, all of our entrepreneurship programs, housing programs, workforce development, homeless programs, all programs designed to try to close the racial wealth gap. Hey, Pamela, great to see you. Chase is a great partner of ours.
Yes, nice to see you as well.
Okay, and Sherman?
Good afternoon, Sherman Wright. I am the managing partner, co-founder, and COO of 1035. We're a marketing agency headquartered here in Chicago with offices in Houston, LA, and Detroit. Our kind of calling card is helping brands transform through culture. That means we help brands find their voice and their place in culture. We work with brands such as Facebook, Nike, Jordan Brand, Microsoft, TikTok, General Mills, Pepsi. If you've seen the most recent campaign where Pepsi is giving $100 million to Black-owned restaurants, we're helping Pepsi lead that charge, as well as just most recently helping TikTok with their Black History Month program. As Rob called himself a serial entrepreneur, I am a habitual entrepreneur. I have about 4 companies, 5 companies, have done everything from exiting companies from tech to cannabis to real estate development, as well as making sure that it's really rooted in the community. I am a proud resident of the Bronzeville Incubator. I am also a Bronzeville resident, so I'm very excited because anytime we're home in the heart and the money can be in the same place, it's always a good thing. So welcome to be here and looking forward, and very honored to be with such an esteemed panelist, and looking forward to the conversation.
I love to hear that. Look at that, you all. Look at this panel. That is amazing. I will say that CIBC, we just opened a new branch in Bronzeville on Pershing Road, right next to the Marianos that was just built. So please go by and see us there as well. Just want to add that. All right, let's go ahead and get into it. The first question is going to be for the entrepreneurs on the call right now with Robert and Sherman. So the first question is, were you financially prepared to own and operate a business before becoming an entrepreneur? If not, what are some things you wish you considered in advance? And if you were financially positioned properly, how did you get to that place? And whoever wants to start.
Well, I can start. The answer was no. I was not financially prepared. I don't think any entrepreneur is really, but what I like to tell people, I like to quote Sun Tzu: in times of peace, prepare for war. Most entrepreneurs become accidental or unintended entrepreneurs. It's not as glamorous as a lot of people think, that you come up with this great idea and there's all of this money that is there available for you to launch, the next big thing. A lot of people become entrepreneurs, particularly entrepreneurs of color and women become entrepreneurs because they've been downsized, right-sized, displaced, discriminated against, or just tired of seeing somebody come up with training somebody on something that they know how to do, or seeing an idea that they had stolen from them. So when I say prepare for peace, prepare for war in times of peace, if you have a job, that is the best time to prepare for entrepreneurship, because once you become an entrepreneur, the likelihood of you getting funded is slim and none, and Slim has just left the building. So when you already have a job and you're making money, start establishing credit, lines of credit, all of the things that you think that you may need when you want to launch your business. And I tell people, regardless of whether or not you're employed, you should always have a side hustle. You should always have another job or another company. As Sherman likes to joke, I got about 50 LLCs that I have, because you never know when that day will come or when that idea will hit. And just from a tax purpose standpoint, it's a great write-off for a lot of the things that you want to do. So in times of peace, prepare for war. So make sure that as you begin to exit your current situation, that you're set up for your next situation.
That's such good advice. I tell people that I work with businesses a lot. Of course, as a banker now, me and Pamela do. I tell them that all the time, do not quit your job. You know, there's some people, they're ready to take that leap of faith. You better not take a leap of faith unless God told you to. Like, make sure you
then ask them again.
Yeah, make sure it's confirmed, you know, because that's the way you're going to set up that business credit. That's what you need, that you need that cash flow, the consistent cash flow. So thank you. Sherman, what about you?
You know, I was blessed to say that I was prepared, but to Rob's point, you start the journey early. You know, what I tell people, you know, people think entrepreneurialism is I'm going to quit, or I'm going to start something and I'm going to own my job. And they fail to realize that it is a transition that, you know, when you become a business, there are so many things that you're going to do that has nothing to do with your job. You know, you work every day and you're not thinking about how are the lights going to get cut on. You know, you work every day and you're not thinking, does this building have insurance? So it's really a self-assessment of understanding what you're getting into. And it's more than just what you're good at. You may be good at a certain thing, but you may not be a good business operator. You know, I'm a married brother, so I was educated on the 4 C's early on in my dating life. And so the 4 C's for me is Rob mentioned it, credit. People think they're going to quit their job and start an LLC. Well, you are the business. So if the business doesn't have credit, what's your credit like? Ensuring that you do have capital. You never have enough. So when I said I was prepared, I had a burn rate of 100 or 365 days. So when I said I was prepared, if I didn't make a dime, I could survive at a minimum because I had to change my lifestyle. So I couldn't survive in the way that I lived. I survived at a bare minimum because I reduced the amount of liabilities and obligations that I needed to ensure I could do that. The other one is collateral of what other assets do you have that can represent, and a service-based business is very hard. You have nothing to put up. And the last piece, which I think is the most important, is competency. You know, people always, I call it the armchair quarterback, can talk about how they can play better than any bear on the field until they take that first hit. So if you're not competent and knowing what you're doing and understanding, you know, all that entails, you know, to Rob's point, I even say, you know, go work for somebody else and doing what you want to do so you can learn on their learn your mistakes on somebody else's dime. So the preparation piece goes way beyond, do I have enough money saved? It's really the personal assessment. Is it in your DNA? Is it in your persona to get on this journey of entrepreneurialism? Because it is so unpredictable. And it's one of the most challenging things you'll ever do.
And just to add to that, just quickly, one of the things that, because Sherman touched on something because we're talking about the mind of an entrepreneur. Most people think that I'm going to become an entrepreneur because I want to work for myself. That is a fallacy. When you become an entrepreneur, you work for everybody else. So it is you're not working for yourself. You're working to, you know, keep your lights on, keep everybody else's lights on, and you have to be willing to take on that mindset. That particularly if you are at the helm, if the ship goes down, it goes down on your watch. Everybody's looking at you to try to figure out whether or not this thing is going to be successful. So the 4 C's that Sherman talks about, all those 4 roads lead to you as the entrepreneur.
That's right.
And then I would just like to kind of chime in as well. You know, great points. You know, it kind of reminds me of some of the conversations that I have with the business entrepreneurs that I'm actually mentoring. And, you know, oftentimes entrepreneurs spend so much time working in their business that they don't work on their business. And so, you know, the day-to-day, as you kind of described, they're great at that, but really being able to take a step back and figure out what's my next step? How do I scale and grow? is my foundation solid enough? To your point, Robert, sometimes in our communities, folks actually start businesses out of necessity, and you can be somewhat successful through that. But then when you really look to grow, some of the behaviors that you use to get to that point will no longer work when you're trying to scale an opportunity. And so having the chance to really invest in yourself as an entrepreneur, taking the time to understand networks and how building those particular relationships can actually lead to long-term results.
Love that. That was awesome. Really, really good advice, you all. I hope you all are taking notes. I really do. Pam, I'm going to go to you next. And before I do, Robert and Sherman, I have a couple LLCs too. So
good.
Business owner as well. Been a serial entrepreneur since I was 12 too in Detroit. So my dad taught us really early. So all that is important, especially for tax purposes, you all. You need to write that down and ask some follow-up questions later about that. So Pamela, now that we're talking about all this personal finance and how they, get set up and how they lay that foundation and get started, as a banker, what are some things that you think business owners can do to help strengthen or weaken their personal finances for their business? So share how personal finances can strengthen or weaken a business when it comes to credit worthiness, when it comes to personal finances, when it comes to having a relationship with your banker, et cetera.
Yeah, no, great question. And it actually ties into something that Sherman had mentioned, which of course are around the 4 C's that you described, which bankers kind of dig into, right? So it's a great segue into that. I would say the one thing though is really understanding that as an entrepreneur, particularly, your personal finances, business finances, the bank typically looks at both of those, right? So it can be one and the same. So how you, what your personal credit reflects, how you're handling, outside obligations is something that is truly important. So one of the things that we definitely encourage entrepreneurs to do is understand what their position is from a personal finance perspective. What are your, assets, liability? Do you have positive or negative net worth, right? So as Sherman kind of mentioned, hey, I have enough cash in order to be able to survive, in essence, for 365 days. And that might require understanding what reserves you have. It also requires your ability to understand how you utilize credit, right? Are your credit cards at almost the maximum? Are you really able to kind of allow the cyclical information to kind of go through? So you use it, you pay it back, so personal finances are really critical and paramount, particularly when businesses are at the infancy stage. If you're talking about startup development and growth, every lender will take a look at how you are handling credit. The way that I look at this is really about helping entrepreneurs change their relationship with money, right? So how that is actually viewed, opportunities to either enhance and grow the finances from that perspective, or things that might drain on them. So the key thing from a personal finance perspective is understanding where you are, 2, really taking the steps that's necessary to ensure that you personally have a strong balance sheet, if you will, that you're managing your expenses appropriately, and that you're able to kind of build some personal wealth for that, because the financial institution will look at you holistically. So to the extent that you may have, a mortgage, you may have retirement funds, you can actually have, let's just say if it's an employer-based, like 401k. So really taking a holistic approach to your finances is extremely critical, and not just in the beginning, but throughout your journey, because it can help you as an entrepreneur understand the financial health of you personally, and how then that can either add value or take away from the value of the business. So highly encourage everyone to go down that path. And the great thing now is that it's so easy to do. Before, you had to call in, request a credit report, wait for it to come in the mail. It was more of a manual process. If you look at tools that we have out there now, obviously there's a financial credit journey that we actually have at Chase. There's the Credit Karma, there's, the Credit Wise. There's so many tools out there that can help you understand what your current position is and really how to improve it.
Thank you so much. All good
Yeah,
advice.
if I could just add to that, as Pamela and Sherman, talked about the 4 C's, which, I think most folks are probably fairly familiar with, or at least have heard. I would like to add a 5th C, which I think most people, particularly in our community, don't fully appreciate. And that 5th C is what I call connection. Because, when we saw this last round of PPP that was passed, or the first round, I should say, most of our small Black businesses weren't able to participate because the way that was set up, it went through the banks, and people often think that just because they have a bank account, a business banking account, which again, a vast majority of our entrepreneurs don't even have a business banking account, but those that do often think that provides them with a relationship with a bank. It really doesn't. You really need to have a connection with that banker, and have a relationship where they know you, you know them. And that's something that I think is undervalued and underappreciated in our community. Most of us don't have banking relationships. We have a bank that we bank with, but we don't have a banking relationship and don't have that connection. I can talk about CIBC for a moment. CIBC, because of the relationship that I had with Rudy Gonzalez at CIBC, he gave me my first loan as an entrepreneur, and then followed up when the stimulus, the Paycheck Protection Program, he called me like, hey, this is something that you can take advantage of. So that's a connection. That's not just a relation. That's not just me having a bank account at the bank. And I think a lot of the entrepreneurs, if you want to understand how you're going to advance your business, you got to begin to establish your team. And a banker or somebody who can give you access to capital is a critical part of your team. And that's something that you have to focus on. The other thing that Pamela talked about earlier that I want to go back to is the idea of an exit. Shirley mentioned it. I'm having a hard time with names today. Sherman mentioned it as well. In terms of when he mentioned that he exited a business. Most entrepreneurs do not start with the end in mind because, like I said, they're accidental entrepreneurs. But as soon as you start a business, you need to figure out how you're going to get out of that business, because that's how you create wealth. It's through an exit, a liquidity event. And most of us do not think that far in advance. That's why you're scaling your business, so that ultimately you can exit it, so that you can sell it or pass it on to somebody so that you can create wealth for yourself. And that's a part that we got to get our community to begin to understand, because that's the whole point of being in business, is to create wealth and create opportunity for yourself and others.
So good. So good. So I want to just read off real quick the 5 C's of credit that we talk about it at the bank. I know that people are probably like, what is this? So I know we're going to add on for us, it'll be the 6 for connections, right? That you did for Robert. But we have capacity, which is cash flow. You have credit, right, which is your character. That's more than just credit, but a lot to do with your personal credit score, and definitely what you do in your business credit. You have collateral, you have capitalization, you have conditions. This is stuff you can Google. Look it up, figure out what the 5 C's of credit are. That is what banks and financial institutions look at and look for when they're determining if they're going to give you a loan for your business, right? And establishing that relationship with the banker is extremely important. That's one of the things I was going to talk to you about, Pamela, as well. That's extremely important. Rudy is one of my colleagues. We work very closely. He's on my team. We work on the same team. I do the same thing that Rudy does. So it's important for you to find a bank that you can have a relationship with as a small business. All banks don't have an appetite for very small businesses, and it is what it is, right? Find you a bank that actually has an appetite for small businesses who are willing to work with small businesses. So let's talk about that for a minute, Pamela. What can a small business do to build a relationship with the bank? How does that look? Where does that start? And what can they do to prepare for that?
Yeah, absolutely. For those that have existing bank accounts, I do think it's helpful to connect with someone there locally, right? So oftentimes it's like you go in, you think you have a relationship, or you have a relationship with the teller, or a relationship with the customer service person, but really asking the banker, or if you're even talking to the teller or customer service person, hey, I want to, establish a relationship. Here's what I want, someone to understand more about my business and how we may work together. Because it's really the bank's responsibility to ensure that they're providing you with a full suite of access to products and services to help you grow. If we were to look at, for example, one of the reasons that our Minority Entrepreneur Initiative kind of sprouted up was really making sure that we take a deeper dive into businesses that may be in under-resourced communities. So if we look at Chicago specifically, it tends to be our Black and Latinx communities that are on the south and west sides of the city. And so to tie into Shantel, your comments, it's like, hey, one, that relationship is also about mentoring, coaching, providing access to information, to resources, opportunities, potentially capital to help these businesses grow to size and scope. Ideally, so you can hire more folks in the community and create a sustainable ecosystem. And so developing a relationship with the bank is really a two-way. One of the things that kind of come to mind are just some of the businesses that I've had the opportunity to mentor. It's also your responsibility as an entrepreneur to do the work, right? So the bank can't want this for you more than you want this for yourself. There will be guidance and coaching along the way, but ultimately the business owner has to make that full commitment. Now, having said that, then the importance of relationship building within that is really an information exchange. So because the banker has experiences that might be specific to your industry and outside of it, and typically has seen a ton of deals. And so they're able to kind of guide and help you facilitate that process. The other reason it's critical in building these relationships, as Robert mentioned, the whole connection thing and making sure that other folks are brought into the equation. Every successful business will have three solid partners at minimum. They'll have their banker, they'll have their CPA, and they'll have their attorney, right? And so these folks are really meant to provide you with guidance and coaching along the way. It can help you grow your business. It can also help identify potential business trends that you may not be aware of and providing access to new opportunities. The other thing that I would mention around this is the importance of being able to invest in yourself as a business owner by attending workshops like this, where Shantel and I are connected with from a banking perspective, because then that is going to help you broaden your network. The other thing that it's really tied to building your relationships more broadly is understanding how you can leverage strategic alliances as a business owner. So there might be someone that's in a complementary industry as you. And so perhaps you guys can work together in order to be able to perhaps bid on a contract or an opportunity that you wouldn't be able to do based upon the level that you're at. In addition to that, it could also be someone that is aligned within your business, within your industry as well, but you're bringing more power and opportunity because collectively your experiences are greater. And so the importance of building relationships within banking and outside of it tend to be critical for the success of a business.
And my apologies, my niece is homeschooling here and I keep telling her to lower her voice, and I know you all are hearing her a little bit, so my sincere apologies, why I keep muting myself. Thank you so much, Pamela. So that is, everything that you said is so important. It's really important for you all to have a team. That's one thing, is having a money mindset. You got to have a team around you. You know, you specialize in whatever you specialize as a business owner, right? But you got to have somebody who specializes in understand banking, who understands accounting, who understands the legal side, right? So that's so important. There's so much more I can ask you, Pamela. I know we don't have a lot of time, but you all, it's very, very important for you to have a relationship with the banker when it comes to business finance, when it comes to business credit. As Robert talked about with Rudy, when you have that relationship, you're not going to miss out on things like PPP, especially if you're listening to that advice that somebody like Pamela will be giving you, et cetera. My customers, I called them directly. So whereas I had a bunch of other people who may have had relationships with other banks who they don't have any type of, they have a bank account, but no type of relationship, they couldn't get through for PPP to try to get it taken care of. Whereas people, I can speak for CIBC, they got the PPP, not only the first and the second, we guided them on forgiveness. All the loans have been forgiven that I've dealt with. And we made sure we reached out to them. They didn't have to reach out to us. We reached out to them. We made sure they were set up, made sure they understood the process and what they needed, et cetera. So it's just so important for you to have that relationship so you don't miss out on certain things like that. Okay, so let's go to, I think you talked about that already, Pamela, so I'm going to skip over that question. And I think that Pamela can answer this too, because she mentors businesses. So I'm gonna put this to all three. So how do you build a business with sustainability and scalability in mind from the start, right? So why is it important to think and operate beyond being a solopreneur? You know, somebody who does everything on their own. We talked a little bit about building that team. So why is it important to think and operate opposite of that? And how do you build a business with sustainability and scalability in mind from the start, or even if you're in the middle? You know, how do you build that business with sustainability and scalability in mind?
So Jay-Z said it best when he said, I'm a businessman, not a businessman. And I think the idea is, I always question, do you want to be an individual or do you want to be an enterprise? And you have to think as a business. And in order to think as a business, you have to understand and study business. I don't care what you do, what business you have, there's going to be certain just principles, understanding your income statement, understanding your balance sheet, understand account receivables, understanding account payables. Are you using GAAP principles? Are you on accrual or on a cash-based calendar year? I mean, there's so many different things that come in that are universal truths of business. Start studying businesses. And I always say, study the businesses that have failed as just as much as the businesses that succeed. You got to understand your law of averages. Most businesses, and argumentatively, I've heard as low as 50 and high as 80% of all businesses that start fail. Another thing I've learned is to fail fast. You know, learn from your mistakes, learn from others' mistakes. There's a great book called The Breakthrough Company by a gentleman by the name of Keith McFarland. Keith McFarland studied businesses, and Harvard Business Review and other reporting entities. There's about 6 companies that are always talked about. Now you hear about the Facebooks and the Googles, but before that, it was the IBMs, it was the Coca-Cola. And, you know, you got to realize small businesses is businesses up to, in some instances, $200 million in revenue. So as we think of small businesses really scale high. And this book was really understand, how do you go from a startup, you know, everybody starts the same. We all put our shoes, one shoe on at a time, up to, you know, a 200 million plus business that is scalable. I had the benefit of scaling a business and exiting a business. And, you know, the journey on the way, there was so much that I wish I would have known early on that would have saved me money and increased the wealth on the back end. So I think it's really studying business, studying at the basics, always be a lifetime learner. Think as an enterprise, understand what an enterprise is versus an individual. And it's really not about you, it's about the ecosystem you operate in. You have, to Robert's point, while it's hustling, while it's grinding, there's so many outside resources, so many things that have nothing to do with your passion that will determine the success and the failure of your initiative. So I would say that study what it means to be an enterprise versus who you are as an individual. That is important, but it will quickly go way beyond you in a very short period of time.
Let me piggyback on what something you just said. As a banker, from a banking standpoint, typically small business is anything. Some banks are under 25 million, some banks are under 10 million. After that, it goes into a different, like commercial banking or something like that. Emily, you can speak on that too. Please do. So when I was at PNC in business banking, as a business banker, you had to be over $1 million in sales, right? And under 10 million in sales. Anything under 10 million went to the next sector. I think at Huntington, it was 25 million under. That was my largest business was 25 million in sales. So 200 million definitely is not a small business. About 150 million, it's not small, but it's not the highest like in corporate either, right? So Pamela, I know you can speak on that too. Please do.
Right, yeah, I think that like for us, if it's over 20 million, it goes to kind of like our middle market team, which would then work with you on more specialized products or services that might meet the needs based upon that. But other than that, it is considered still within under 20, it's within business banking. And, you know, there's several teams that are really dedicated to the business based upon the size, right? So what a $1 million business may or less may need will be different perhaps for a business that is, you know, from 1 to 5 and so forth. And so typically institutions will kind of break down the area of expertise and the area of revenue based upon, you know, the demands of the business. But absolutely. And again, it still ties into having those core relationships and looking at it as a business as opposed to, as you mentioned, like a solo, you know, entrepreneur, which is like, I can do everything myself. And that is not the best play.
And I want to point something out, we're talking about finance too, from a small business. It's so good that you even brought that up, Sherman, because a lot of people don't understand what is a small business. And to understand that a $25 million business can still be considered a small business at a bank, a $20 million business can still be considered a small business at a bank. That's huge to think about how we're looking at this, how we're looking at it as you are the business. When I managed a $25 million relationship at the bank, when he wanted to get a loan, we still put his personal credit. And I think that's a common misconception in our community, that personal credit doesn't matter. Oh, can't you just go off my business credit? I don't know where that came from and where that lie came from and uprooted and went crazy around our community. But we're looking at your personal credit, even up to a business that's 25 million in sales, right? So just always think about that and what is a small business, especially from a banking standpoint. And please, Robert, I know you're.
Yeah, no, I was just going to add to that. I mean, I just want to kind of root our audience in sort of some of the numbers. And Sherman's heard me quote this statistic as well. When we talk about small businesses, particularly when we're talking about the African-American community, there's 2.6 million Black businesses in the United States. 96% of those are solopreneurs. So that's the vast majority of our businesses are solopreneurs. And then that remaining 4%, maybe about 2 to 3% of those have revenues in excess of $1 million. So the last point that you made, personal credit, all of that is going to be paramount, because we're dealing for the most part in our community with what are really called micro businesses. So again, that's why it's important that if you understand that, going back to Sherman's point, do you want to be a solopreneur or do you want to be an enterprise? And if you want to be an enterprise, then there's certain things that you have to put in place to make it scalable and saleable. And the first is a team. First, you got to hire your first employee. You got to get to the point where you can hire your first employee. And to get to that point, you know, I'm a big franchising guy. I spent 14 years at McDonald's. You got to put systems in place that are replicable, because you cannot sell that nobody's going to buy that business, because if it depends on you to make it go, then by definition, when you sell it, there's no more you there. So you got to put systems in place that are replicable, that other people can step into, and that it can operate beyond you. That's how you begin to scale. Every business needs at least 4 things. And you touched on 3 of them already. You need a lawyer, you need legal, you need accounting, you need operations, and you need marketing. I don't care what kind of businesses you're in, you need those 4 things. So until you get to the point where you have those systems in place, where either they're outsourced, which, you know, the next stage after you become a solopreneur is bring on that one individual, 2, 3 people, but then you got to start figuring out how you're going to manage those aspects of your business so that you actually have a business. What we're trying to do with that 96% of businesses that exist is just get them to be a legitimate business. And there's 5 things that you need to be a legitimate business. You need an LLC or some kind of a corporate structure. You need an EIN. You need at least some kind of landing page so that people know that you're there. You need a business plan that the SBDC can help you get through their plan for profit or growth wheel. Those 4 things make you a legitimate business. Oh, and a business bank account, that's the 5th thing. Those are the 5 things that you need to do to actually go from solopreneur, where you're just a hustle, to launch. Now you're a business, but you're still a micro business. Now we got to get you to where you're scalable. And then that becomes the next step, where we build those 4 things around you in terms of having those functional departments to grow your business.
I hope you are taking notes. I really do. That's some good advice and information. Also, everybody, look up micro lending so you can understand what that is. As a micro business, you're going to want to look for micro lending when it comes to building business credit, and look up what that means and where you can find that. Chicago has many of them. CIBC, we have micro lending here too. So Just look that up. That's really, really, really important when it comes to building business credit. Anybody have anything else they want to add before I go to the next thing?
I would just add something, just to kind of take a slightly different spin as businesses look to kind of start and grow and build some traction. One potential opportunity that could help in the areas that we talked about around, capacity and credit and building is just, considering an opportunity to acquire an existing business. Because if you do that, you're buying cash flows good, right? So depending on the business, you may have collateral because the building could be attached to it. They already have a track record, and depending upon how the deal would be structured, management, even if it'll be a transition, they may be able to stay on for a period of time to kind of help coach, guide, the new business, the new owner in essence. And so, I always encourage businesses to look at explore all opportunities and not just kind of be really focused on starting and developing their own. Maybe there are things that you can take from the existing business that'll really help you scale up quicker, and you can add your specialty to their line.
Pamela, follow-up question. Oh, go ahead, Robert, please.
No, that's an excellent point. So one of my businesses as a business broker, and that's one of the reasons that I bought it, is because in my view, our community is so far behind. Sherman mentioned Bronzeville. I live in Bronzeville as well. And Bronzeville is considered one of the more affluent African-American communities in Chicago, and it has $1 billion retail gap. Every year, $1 billion goes out of Bronzeville because we don't have the businesses in our community that the people who live here want to patronize. And every African-American community in Chicago is the same way. It has some level of a retail gap. So for me, startups, as wonderful and as much fanfare as they get, are not the only solution for us to develop our community economically quickly. Franchises are built to scale by definition, and buying existing businesses, particularly now given what's happening in the pandemic, you have a lot of businesses that are deciding not to continue because of what has happened in the pandemic. Those businesses are being offered for sale. So a lot of those business owners, their kids don't want to take over the business. So it's a great opportunity for Caucasian businesses to be flipped to African-American owned businesses. And similarly, there's a great opportunity for the Black businesses that we do have that are also tired and want to sell, to have those businesses acquired by other people in the community to keep those in the community. And as Pamela said, it's much easier to get financing for something that already exists and that has cash flow, as opposed to you trying to come up with, projections about what it is that you think you're going to be able to do.
Somebody once shared with this to me, and I thought it was, wealth is created by transactions, and there's usually 3 transactions. There's death, which is inheritance, which is one of the biggest wealth creators out there. There's a transaction of a business, be it an acquisition or a sell, or it's going public. And if you look at the wealth generators and the wealth creators today, there's usually some kind of transaction in business. So you ask about what is an enterprise, something that's scalable, something that can be, there's some level of transaction where there will be some type of value transaction for your business. I give you, monetize your business in ways that, is done less than a one-on-one service-based business. To Robert's point, there's only so many hours you can work in a day to be compensated. So if you put a value on your hourly rate, let's say you are worth $1,000 an hour. So that means in a given day, you're working about, let's say 10 hours. So within that $10,000 an hour, and there's 12 months, you do the math, that's $120,000 a year. You do 30% taxes, you start backing out. So you may be working those hours. At the end of the day, it's not that much different from a salary. Then you throw in healthcare, then you throw in all the expenses. So you're back to making less money than you did when you were working somebody else, because you didn't have to worry about healthcare. You didn't have to worry about light. So think about business as transaction, and those individuals, you're compensated on an hourly rate. So there's only so many hours, and there's only, unless you're one of the top lawyers in the world, that hourly rate is probably going to be sands of $600 an hour. So on the high end, maybe $500 an hour, and you take what I just gave you, that number, divided by 2. So you start doing the math. So when you understand enterprise and you start, business is about math. And I was a journalism major, but I soon learned the importance of understanding the numbers and planning to get to a point where you want to go. So think about business is very transactional. So M&A is something that I believe in. I think it's something our community has not really participated in. And it is the #1 cause of wealth creation in America. If you look at any wealthy person, there was some level of transaction that took them from here to there. There's this thing called a multiple. I don't know if we got a chance to talk about that and understanding your EBITDA and a multiple and how you get that return.
EBITDA and month, like that would be a whole nother.
Yeah, so I'm not going to go there. But once you understand the math,
practice depreciation, amortization.
Yeah, once you understand the math,
definition of that,
you figure it's not about working hard, it's working smart and being knowledgeable. So I won't go there.
We need a whole nother class for that. But it is important to know and to understand that. I hope you took notes on Sherman as well. Like it's so much you can Google. In this age, you can look up anything, right? So as entrepreneurs, there's not really a lot of excuses at this point because you literally have it at your fingertips. When I was working back, and my dad has been an entrepreneur all his life too, he couldn't just get online and find anything out back in the day. It wasn't possible. Now you have it at your fingertips. So make sure that you're doing that work before you come to somebody too. Pamela, really quickly, will you lend off only projections?
I think that we look at the whole package, but if it's just projection, it makes it difficult to do something like that. If it's literally just projections.
People to understand that, right? So I love what you said too, Robert. Just the understanding that you have to have something else. Like you can't just come. It's easier, like Pam said, and what Robert said, it's easier for you to lend when you have something existing versus having just those projections. If you only have those projections, you got to have something else to back it up, right? You got to have some personal cash flow coming in. Like she said, we do a holistic view, something called global cash flow. We're looking at your business and your personal cash flow together, right? So, and if you have projections, that's not cash flow. I like to remind people that banks are not nonprofits. That's the way they think of us. Honestly, I promise you, they think of, we have this good plan. Banks do not work that way. You got to show cash flow. You got to show you can pay them back. That's their whole business. They lend, they get paid back. That's how I get paid. That's how Pam gets paid. So that's the only way they're going to be looking at that. And then also you said something too, Pamela, collateral real quickly. Is that all you need? If you have a whole building free and clear, could you get a loan? And that's something that people need to understand too. I get that question a lot. That's just one of the C's. Right? If you don't have the other C's, then that really won't get you anywhere.
One of the best pieces of advice when I started my business, I had a mentor, person who started an agency. And I remember I was telling him the day before I quit my job, I was like, I'm quitting tomorrow. And he asked me, he said, did you go get a line of credit on your home? And I said, no, I'll do that after I quit. He said, you're going to go from working for 7 years with this company, making a very high salary with a strong work history, to unemployed. So he said, what makes you think a bank's going to finance your home, even though that home had appreciated value? A day of difference. If I would have did that the day before I quit versus the day after I quit, my trajectory would have changed. And I did end up tapping into that line of credit. But that one simple decision of preparing yourself while you're employed and while you have a history, because while entrepreneurialism sounds glamorous, it is one of the hardest things that you do, and you have no value, especially a business that's not cash flowing. So that transition, you go from, high level executive to broke hustler in like 24 hours. So be conscious of when you step into that arena, your life changes, your identity changes, who you are changes.
And at the risk of offending my esteemed bank colleagues on the phone, or what I tell entrepreneurs is that banks only lend money to people who don't need it. So the likelihood of you coming there with some sob story and you being on your last leg and thinking that you're going to be an attractive partner to the bank is highly unlikely. They want to know that they're going to get paid back. They're in the business of making money, so they want to partner with you and help you both make money. They don't want just you to make money, but they want to make money as well. Otherwise, they're not going to be in a position to be able to make further loans. So,
and to build on it, Robert, quickly, two things: predictability and continuity. Can I predict that this revenue will happen consistently? And then that continuity is, can this service be performed over and over again, understanding that there are environmental forces. So as a business entrepreneur, you want to mitigate the risk. You're telling a story, and you need to have history of, here's the story and here's the history. So you're looking at a trailing 12 months. You're looking at a trailing, not in the future, because we all know with COVID and also outside it, the future is the most unpredictable thing. Your history as an individual, as a business. So the sooner you start building the right history versus trying to correct a past history, is the predictability that you will have more success in the future. So start creating your history now.
You all write that down.
Yes.
Predictability and continue. What else?
Continuity.
Continuity. Yeah. Make sure you all write that down. That is so important. And Robert, we do help people, but you do gotta show that you can pay it back.
Absolutely.
You can't, just the same way a bank isn't going to give you a mortgage if you can't afford it. They're not going to give you a business loan if you can't afford it. I think people need to start thinking about loans as loans. Don't think about a business loan as anything different than if you were coming to get a mortgage or a car. Even though it is different, there are certain things that play a part in it. But you got to be able to show you can pay it back. If you can't show that you can pay it back, a bank isn't going to give you a loan for a house when you show projections that, hey, I project that I'm going to make this much in the next 2 years. You think they're going to give you a house for that? No. Same thing with the business loan. They're not going to give you a business loan with what you think you can make. They're looking at the historical information with what Sherman just said.
And that's why one last thing, that's why, the personal credit or personal finances also plays into this, because from a predictability standpoint, it's like, how have you handled your personal finances in the past? That might be, an indicator of what we can expect for on the business side in the future, since you as a business owner is directly tied to the business, and then of course your personal finances. So, making sure that your personal credit house is in order is extremely important.
I love that. It's all about mitigating that risk, like Sherman said. All this is so good. We have another question, but we don't have a lot of time. I know we can go until 1:15 to have like some questions. So I'm going to give you all a choice about kind of what you want to say closing out. We can talk about the closing comments and what you think about as far as the mindset of the money mindset of an entrepreneur. But also there's a question about pivoting in 2020 and what that looked like for business owners and how did you successfully pivot. So if you want to kind of tie that together, how you successfully pivot, and then just give some closing comments of what you think, what is the money mindset of an entrepreneur today? And whoever wants to start. So first of all, how did you pivot, Robert and Sherman, in 2020? Let's do that. We got a little bit of time. If you want to do it really quickly, how did you pivot in 2020? And what are some things that the entrepreneurs on the call can do to pivot their business with what's going on right now, being in the middle of a pandemic?
So I tell everybody, I'm still pivoting today. It used to be, give me a 5-year plan. I tell our team, every 90 days, the world will change. If you think about businesses, success is what? Quarterly reports. So every 3 months, a company's success, it's reporting to Wall Street is how did it perform in those 3 months? And they have what they call projections. You project out, you either hit your projections or you don't. And if you don't hit your projections, you pivot. You need to start doing something differently. So for me, how I pivoted, we did a lot of experiential based business. So we did large events for like Mountain Dew and during All-Star Weekend and Essence Music Festival. And before that, that was a very cash intensive, capital heavy and exposed business. We started really honing down in digital and understanding behavior-based marketing engagement, social media, and really building competencies there into being a content creating company. So really looking at the trends of where the market is going, when you're starting to see, study the world, consumer confidence is how they judge if, a bull or a bear market, if people are saving more, if people are spending more. So environmental influences kind of stay ahead of the curve. Don't try to predict out 5 years. My philosophy is every 90 days, what are the things, what are we seeing from COVID to George Floyd to the election to the Capitol to phase 2 of the vaccination. If you think about it, all those things are happening about every 90 days. So be a student of what's going on in your industry, what's going on in the world, what's going on in your community, and really kind of seeing where opportunities lie and making sure that you're nimble, you're flexible, resourceful, capitalize. Make sure you have a board of directors, of advisors. So it's a very complicated, complex formula to stay abreast and to kind of hopefully keep your head above water.
I love that right now during COVID, every 90 days, right? Figure out where you are and pivot if you need to.
Yeah, similarly, I mean, I took a very similar approach. For me, again, since we're talking about the mind of the entrepreneur, I looked at what's going on with me, because that's what's going to be what's going on with my business. So the word that I looked at for 2020 was really resilience. And I think that's the overarching theme that you need to have as an entrepreneur is resilience and grit. But it was particularly evident and necessary in 2020 because, you know, I've had people who passed as a result of COVID. You know, there was a lot of uncertainty globally, and it really made me hone in on what's important for me personally, and then what kind of business, what kind of legacy, what kind of lifestyle do I want to have, and what is it that I'm trying to create. So the pivot for me was around, again, similar to what Sherman said, trying to take the Wayne Gretzky approach and to skate to where the puck is going to be. Be mindful of what's happening in the current environment, but also look at where is this going and what is the likelihood and where is the opportunity. And I've always been one to try to look for the white space, which is where there's nobody playing or where there's low barriers to entry, and try to see where those opportunities are. And although this is a pandemic and it's been horrible, but there's opportunity in every scenario. As Warren Buffett said, when there's blood in the streets, that's the time to buy. So I look for those opportunities and continue to mine those opportunities, and started looking at not only the opportunities, but how do I position the brand in a way to capitalize on some of those opportunities. And looking at, and what for me, a lot of the stuff that's come to fore is stuff that I was already doing way before the pandemic. You know, I got the chance to lean into Blackness because right now Black is hot. So I've been trying to do stuff with Black businesses, you know, for the last 10 years. Now all of a sudden it's hot. So I'm trying to take advantage and really lean into how am I supporting entrepreneurs? How am I growing my business as a Black entrepreneur? How is it that I'm speaking about social issues? How is it that I'm trying to close the racial wealth gap? How is it that I'm trying to educate folks around what it is that they need to do in order to take advantage of these opportunities out there? So I'm concerned about the longevity of this cycle. So I'm trying to make sure that we are positioned to take advantage of it as long as it's open. And then as soon as that one closes, to figure out, to Sherman's point, to be nimble enough to pivot into another direction.
Love it. Pamela, what closing comments do you have about the money mindset of an entrepreneur?
You know, I'd actually like to kind of add to what Robert and Sherman had mentioned, because I think if I look at the businesses that I have been mentoring, you know, it's really during the 2020, the pandemic, it was to helping them understand their revenue streams. Oftentimes for them, it was like all in one category. And once that dried up, it was nothing else, right? So it was like, okay, let's figure out how to diversify your revenue streams, or where are you typically making your money at? And then is there potentially another use, another market that you can uncover that would benefit from that? And so just to kind of echo what they said around just understanding the landscape, being able to diversify revenue streams so that in the event maybe one dries up, there might be another opportunity. I had a business owner that was actually in a similar situation, but they were really focusing on consumers, but and a very small percentage was B2B. But the reality was that when we dug deeper, that's where the opportunity was, on the B2B side. And so as a result of them pivoting to B2B, they actually, 2020 and so far 2021 has been their best year ever, right? So as an entrepreneur, just looking at all of the opportunities that may be available and not, you know, just one particular area. And the last thing that I would say is on making sure that you are current with technology. You know, it's clear that there was a digital divide that's out there. Here's an opportunity if you haven't had a chance to invest in technology and figure out how to use technology to make faster, more efficient business decisions. That's something that I would encourage you to do. What we saw is those businesses that were able to use that and to think out of the traditional box, they were able to gain additional clients and really be successful despite what was actually going on from a pandemic standpoint.
Any closing comments from you, Robert or Sherman?
Yeah, I will just quickly build on that. Somebody once say the day you win a client is a day you're closer to losing that client. So you should work everything in your power to extend that client's journey because they are going to leave. The other thing they said, you know, treat and reward success and failure the same, punish inactivity. So you have to realize you have to be engaged. This is not easy. The more successful you get, the harder it becomes. The more money, more problems. That has reason why, because success tracks a whole bunch of different challenges. And the more successful you become, you know, Rob uses this all the time, you start to breathe rare air. You start getting in areas that you have no experience. That's why some of your top CEOs have coaches, counselors. That's why companies have board of directors. So the more that you can arm yourself with advisors in certain areas and know your blind spots, you know, my thing is I'm a lateral thinker. I know a lot about I know little about a lot of things, but I got subject matter experts that can go deep. I don't have enough time, bandwidth, or my ADD will not allow me to go so deep that I need to surround myself with a circle of influencers that, you know, keep me honest, but keep me informed. So this is not the proverb of, you know, go faster, go along, go further, go together. There's a reason why an enterprise and an individual only can get so far.
Yeah, to build on that, I think it was Marshall Goldsmith that said, what got you here won't get you there. And that's the thing that I think a lot of entrepreneurs fail to realize is because we've been so great, or we're so great at this one thing, that we think this one thing that we are good at will take us to wherever it is that we want to go. And at different stages of your life, you need different resources and tools. At different stages in your business, you need different resources and tools. You know what they say, different levels, different devils, whatever the slogan is. You got to understand that there's levels to this, and at each level, you got to level up in a different way to accomplish whatever it is that you're trying to accomplish. The other thing I would say, to again quote Warren Buffett, is to try to figure out how you can build a moat around your business. Most people look at businesses as, you know, something that's going to grow. But you also got to look at the protection side. What are the things that you got in place to protect? The reason castles had moats around them was for protection, so people couldn't get to them. So we talked about, the relationship with a banker, but another important relationship that you need to have is with an insurance broker. You need to have, business interruption insurance, D&O. I mean, there's a whole bunch of other things that you need to do to protect what you've developed as well. And then going back to the personal finance, one of the problems that a lot of businesses have, particularly these micro businesses, is that you don't pay yourself first. So you create these businesses, and I have clients that have been in business for 20, 30 years and don't have a 401k. So all you again have created is a lifestyle, but then when you try to sell that business, which we've already talked about, if it's not a scalable, saleable business, you can't sell it. That means you just have to stop working it. That means your income dries up because your income was being generated from the business. So create, again, those systems. The first system is your retirement plan. How is it that, because that is an exit strategy too. How is it that you're going to be able to sustain yourself once you stop working? Because at some point you're going to have to stop working. It just is. So begin with the end in mind, whether that be your exit, your retirement plan, your team of advisors, whatever it is that you're going to need to put in place to make that business an enterprise. Begin with that tomorrow or today.
I love that. I hope you all have been taking notes. The only closing comments I have is definitely the mindset that you need to have is have a team. I think if anything that you can take from this is making sure that you find people that can be on your team and having a good team around you, right? So you can go from that solopreneur to that enterprise, what Sherman was talking about. So I'm looking for the questions. A lot of them have been answered. There's one here, I think that's for you, Pamela. I don't really know if he asked it correctly. It says, how do you join the Minority Entrepreneur Initiative?
So we can definitely, so the way that you join, it would just be, you can, if you guys have my contact information, you can reach out and then we can just have a discussion around it. What happens is that it is specifically the training, one-on-one mentoring and group coaching and working with other organizations. And so we can certainly have an introductory discussion and then just kind of go from there. But the fastest way would just be to reach out to me.
I love that. So are we gonna, I know that Lauren is on here, Sandra is on here. Are they gonna get our contact information somewhere? Are you gonna send it out to the group, people who join?
Yeah, we will send out information in a post-summit email, so we'll definitely make sure everyone is connected. Thank y'all so much for this awesome conversation. Thank you, Shantel Hampton, for your amazing moderation. Thank you. Sorry, y'all can't see me. Thank you, Pamela Randall. Thank you, Sherman Wright. And thank you, Robert Johnson. I'm actually gonna just share my screen really quickly. Hopefully we can see.
You all did amazing. Pamela, I'm sorry. Robert, Sherman, thank you. This is a great panel.
Yes. And for everyone who was in attendance, if you've been following along in the chat, we did drop a link to sign up for tomorrow's workshop, The Person and the Entrepreneur. So you still have time to join that. We also shared information about how to get in contact with the SBDC, any location of your choice. So make sure that you get connected, and we appreciate you staying on. You are entered for the possibility to win these amazing goodie prizes that we have for you, but we appreciate you attending the Uncommon Sense panel today, and we look forward to seeing you at the rest of the summit. Take care.
Thank you.
Thanks, everybody.
Thank you.
Good job.